Good evening, ladies. Do not be like me in the last two cycles where I took zero profits and round tripped 90% of my gains or 90% of my portfolio in those two cycles. In this cycle, I want to be a lot more disciplined, and I want to explain to you exactly why I've started taking a little bit of profit on Bitcoin specifically and what I'm actually going to do with those profits. So kind of what I'm thinking is taking some profits out into the bank or into like yield strategies that can earn really good yields, which I'll talk about. And then the other 50% just allocating into really, really high risk stuff for the rest of the cycle. The idea is then I've taken some profits out, but if the market keeps ripping, it's like my portfolio is now more levered up with more risky or levered bets. So it will make up for the profits that I've taken out if we keep ripping. So I'm going to tell you exactly what strategies you could do to get that leverage, because either if we go down or if we continue to go up, I'll be happy. It's kind of how I'm thinking, rather than playing in the middle of the field, still being fully invested. So I kind of talked about this in January. I said that the Bitcoin dominance chart has topped. Bitcoin's probably put in the majority of its run. And yeah, since then I was kind of right. However, like I was basically saying, I'm selling some of my Bitcoin and rotating it into hype. And in the short term, that trade didn't work out very well, but now it is working well. Obviously, we had that entire Trump fiasco, that whole tariff nonsense, which dumped the markets. So I say, like, if that hadn't happened, we would have got the alt season that we're starting to get now, potentially. So if we're looking at this Bitcoin dominance chart, it does kind of look like it might have topped. So we've yet to see if this is going to be an actual proper breakdown of the Bitcoin dominance chart, or if it's going to be another small little bump before Bitcoin continues higher like every other time in the cycle so far. But yeah, Bitcoin dominance mostly dumps on the back of Ethereum pumping, and Ethereum's been performing really well. And I wouldn't be surprised if Ethereum continues to perform well, especially in comparisons to Bitcoin. All of these treasury companies are coming for Ethereum. Tom Lee is going crazy. He's like a goated stock market investor, like Super Bull. He's starting up one of these Ethereum treasury companies. So Ethereum's looking hot. Solana's going to be pumping off the back of Ethereum because, it's a relative bet against Ethereum. So to me, it does look like alts in general do have the green light to run here a bit. So I'm kind of thinking, I want to take out some money now for the cycle. I know in a year's time I'll be pretty unhappy. Most likely I'd be pretty unhappy if I hadn't taken anything out again. So what should I take profits out on? I think if Bitcoin has done a large portion of its run at this stage, like we're obviously buying heavy during like 2 years ago, but how much upside does Bitcoin have left here in the short term? I'm talking about in this cycle, in the next few months, in the next year, like maybe 50% in a good case scenario, which will get Bitcoin up to like 180k from here. So 50% upside, but you're still taking like a 50% potential downside. And I'm going to show you some strategies where you can basically get 50% upside pretty much risk-free, much less riskier than something like Bitcoin. So that's what I'm kind of thinking. I'm going to rotate some of my Bitcoin into like yield strategies that can make me 20%, 30%, 50%, 100%, depending on the time. And then the other 50% of those profits that I take, I can either put them into the bank, or I can put them into like levered bets on Solana, levered bets on Bitcoin, levered bets on Ethereum. My profits that I'm taking out are in the bank and they're cashed in, they're cashed out, and they're never to be put back into the markets until the next bear market. And then the other half are, and by that I mean like stable coins that are getting yield or just in your bank account, whatever. So this is like cashed off and it's not going to re-enter the market. The other 50% I'm going to allocate the Bitcoin that I sold to into levered bets, and I'll talk about some levered bets. Stuff like treasury companies, stuff like just levered longs, stuff like memecoin, stuff like NFTs, I'll show you some things that I'm looking at. And in that scenario, no matter if we go up, my levered bets are going to make up for the cash and the profits that I've taken out. So my portfolio is going to perform hopefully somewhat similarly as if I hadn't cashed out. But now I have this downside protection in case, we've topped already, or we're topping soon. So that's kind of the way I'm thinking about it. So I have been talking about this idea and these ideas on my streams. So if you're not watching my streams, you can click live on YouTube and you can watch them back. And I'm also streaming on Pump Fun. So if you want to invest in me in the Pump Fun coin, go for it. I'll leave the link in the description. But I'm starting to stream on Pump Fun because I think, it could be a narrative at some point. So why do I think Bitcoin's upside is somewhat limited in the short term? It's like, who else is yet to buy? Like, the only thing that would make me change my mind is if countries start to buy, or Mag 7 companies start to buy Bitcoin and put it on their balance sheet. That's very, very possible. But right now we're starting to see a lot of speculative treasury companies, which is just going levered long Bitcoin, which obviously is retarded, but it's going to pump Bitcoin's price in the short term. So Bitcoin can keep doing well, but at some point, like it's previously thought, TradFi coming into Bitcoin means we're going to have less severe bear markets, and we'll probably have less severe bull markets. Like Bitcoin will have like a rounded top like it did in the last cycle, and it will have like a rounded bottom, maybe a dump of like 50% or 40% bear market rather than 80% bear market. But now, because of these Bitcoin treasury companies and all this leverage, we could go back to like a serious crash in Bitcoin. So that's kind of why I'm thinking, I don't know when the top's going to be. I'm going to sell more and more and more and more as we go higher. So for you, that could be like 1% of your portfolio a week, 1% of your Bitcoin a week. Or it can be like 1% this week, 1.5% next week, 2% the week after. So then you're selling more and more as time goes on, or as the price increases, something like that. And I think we always believe that, we sell our Bitcoin to TradFi, to the boomers. We're using the boomers who are taking on leverage to buy our Bitcoin. We're selling it to them. So selling to people who are taking on leverage to buy more, kind of seems like a smart way to go about it. But obviously you do whatever you want. But for me, I want to come away from this bull market with something to show for it. And then when you have a bit of cash in the next bear market and all these treasury companies blow up, that's when you can buy it back, hopefully for cheaper than you sold it, is the way I'm thinking about it. So if you were here for this entire bull market or the last bull market, if you go back to 2023, like your mindset then, thinking of today, July 2025, in 2023, if you said, okay, Bitcoin's 100, like someone told you Bitcoin's 120,000, like everything's going crazy, stuff starting to get euphoric, there's all this leverage building up, we're coming towards the end of the 4-year cycle. So if you believe in the 4-year cycle, we're supposed to top in September, in 2 months. Like that's however many days after the halving. But usually it's like Q4 of 2 years after the halving. So that was like 2021, same thing happened in 2017. It was December 2017, November 2021. That would be like September, October 2025. Probably in 2023, the person then would be like, yeah, I should probably start taking profits around this time. So you can start slowly. That's kind of how I'm thinking. It's like, yeah, previous me would be like, you need to start taking profits here. Okay, so now I want to talk about the strategy of what I'm doing with these Bitcoin profits. So I'm basically selling some Bitcoin, rotating some of it into risky stuff, and then keeping some of it in safe stuff, like putting it into my bank to pay off debt, or investing in Tesla stock. That's some of the safe stuff that I'm rotating into. Like, I'm just telling you here what I'm doing. You have to come up with your own ideas, but this hopefully helps you make up your own mind of what you should do with your own money. But I'm selling some Bitcoin, putting some into Tesla stock, paying off some debt, and the other safe thing that I'm rotating into, these are like yield strategies that I've talked about a lot, significantly on stream. But because of all the leverage going on right now, say we go to something like Hyperliquid, the open interest, the funding that you can get on like Filecoin, for example, right now is 80% funding for the perp leverage for the... So what exactly does that mean? It's basically meaning people are paying 70% APY to go long Filecoin. So they're borrowing at 70% APY to long Filecoin. You can capture this 70% basically risk-free by shorting Filecoin. How do you make it risk-free? You take some of those profits. So say you sold $1,000 worth of Bitcoin, You buy $500, or you buy, let's say you buy $1,000 worth of Filecoin spot, put it in your wallet on Hyperliquid, and then you use your collateral to go like 10x short Hyperliquid, or 5x short. I think the max is what? No, it is 10x on Filecoin. So you can just short it 10x on Hyperliquid, and then no matter which way the price goes, you're like hedged, because if Filecoin goes up, your short loses money, but the Filecoin spot that you have gains money by the same amount. So you can't actually lose money, and you're just capturing that yield. So that's 70% APY. Do we think that Bitcoin's going to perform that well? Is it going to go up 70% in the next year? Maybe, maybe not. This is basically risk-free. So there's another way you can capture this is by using liminal. So you can ask me in my Telegram group if you want an invite code to that, but it's basically doing the exact same thing, except it does it automatically, so you don't have to do it manually. But it's quite simple to do it manually. Same thing on Hyperliquid right now. Really safe asset, but people are paying 100% APY to long Hyperliquid. Pretty insane. Like, just buy it spot and don't pay this funding if you're the one going leverage long, or just borrow stables somewhere cheaply and then buy the Hyperliquid spot. But people want to use perp leverage, so you can just take the other side of that and capture that free yield with the profits that you've taken out. Now let's talk about the more degen ways of how you could get more exposure to the markets. So say you're taking out some profits in your like safe plays, so you take out some profits in Bitcoin, and as time goes on, I'll probably take out profits in Solana, maybe eventually profits in Hyperliquid, but I think Hyperliquid's going to continue earning a lot of money over the next 6 months, because like you can see, people are trading like crazy, so that buyback should keep hype from dropping too hard. But for stuff like Bitcoin and Solana, which I've held for years, that I'm kind of thinking, okay, how can I get, like if I sell some Bitcoin, if I sell some Solana, how can I sell some, but like buy something else that's going to capture that same amount of upside, but just like double the upside? So things I'd be looking at are NFTs, so Bitcoin NFTs. If they come back, if Bitcoin keeps going, if Bitcoin NFTs come back, I'd say it's pretty, like, it's obviously much riskier than holding Bitcoin, but stuff like ordinals, like they could go crazy. So you could just put even like 10% of the Bitcoin that you held into all these ordinals, which are down, 90% from their all-time highs. Even if you get a 2x or a 3x, that's going to massively outperform the Bitcoin that you did hold previously. Same with Solana NFTs. NFTs are like really pumping right now. Like NFTs might not be the best bet, but let me just talk through it anyway. I'm going to give you some more suggestions after. But as you can see, Solana NFTs have popped. Ethereum NFTs have really popped. Someone came in and bought like 80 CryptoPunks. It was like $10 million sweep. Someone bought a shitload of Pudgy Penguins, Bored Apes. So Ethereum NFTs are popping off. This usually happens at the end of a cycle because people want to flex. So like they want to get fancy NFTs, they want to get status symbols like Rolexes. So if you see people buying Rolexes, if you yourself want to buy a Rolex, if you yourself are looking for a new car or a new house, if you're shopping for that because of the gains that you've made, it's a really good signal. Or if you're sending screenshots to people, that you need to be taking profits right now. When people have excess money that they're willing to spend, it means they're probably going to start selling, or they're not going to be buying more crypto at that point. So that's when tops start to happen. I'm not calling the crypto top whatsoever. I think we have more room to run, but it's in those moments of euphoria that you need to start potentially, definitely not buying more like Bitcoin unless you're like, you need to be selling more than you're buying. But yeah, you could be looking for some NFTs potentially for beta on Solana, on Bitcoin, on Ethereum, whatever, or even Hyperliquid, whatever main coins that you like. Other good exposure would be the treasury companies. So say you sold $1,000 worth of Bitcoin, you can put 500 into your bank and then buy €500 worth of one of these treasury companies that, like, say you probably go down a bit on the risk curve. Like, I don't think MicroStrategy is going to outperform Bitcoin by 2x, but maybe one of the really dodgy ones could. So basically, if Bitcoin is top tier, at least like these treasury companies basically go to zero, but at least you took out €500 worth of Bitcoin. But if Bitcoin keeps running and you're like, oh, feck, I shouldn't have sold that Bitcoin, But oh, I bought the treasury company, which is absolutely ripping, and it's somewhat making up for the profits I took out. That's kind of the idea. I know there's Solana ones as well, so DeFi Dev, I'm sure there's other ones, and there's other Bitcoin strategy companies that are probably going to outperform Bitcoin if we keep going in this crazy bull market. And even Hyperliquid ones, Ethereum ones, probably like they're just levered bets with no liquidation risk. Or you could just go 2x levered long on Bitcoin or 2x levered long on Ethereum with the other half. And then those perp trades, although you're going to be paying a bit of funding, like we talked about, it's not ideal to be paying the funding. You'd want to be receiving the funding. At least you're going to be exposed to the same amount. So if, say you sell €1,000 worth of Bitcoin, you put 500 into the bank and you put 500 on a 2x levered long Bitcoin. Now you own the same amount of Bitcoin, so you're going to capture the same amount of upside minus a bit of funding, and you also have the cash in your bank, and you're only going to get liquidated if Bitcoin drops by 50%. So that's another idea that you could think about. And finally, the other option of beta to crypto, like things that should outperform the majors if we keep going in the cycle, are meme coins. The meme coins that I hold are WIF, Giga, Farcoin, Pengu. They're like my favorite ones. And then some really, really small ones that, like, I kind of think the big ones are probably, you know, like better risk to reward than the small ones because, well, it's up to you, I guess. But yeah, I have some small ones, Housecoin, Chill House, Neat. I like those as well. But, you know, meme coins, I'd be a little bit more careful. Get out of the trenches. Don't be like buying shitloads of really small market cap ones. Like, you could put out a few flyers on stuff potentially and keep an eye out for one. Like, there's always going to be a new meme that pops off and goes to $1 billion or $100 million market cap. But a lot of the time they're kind of obvious in, like, at the time we'll talk about them. I don't see any myself right now. So that's essentially what I'm doing with my profits over the next few months. I want to sell more and more and more crypto and just basically sell the less risky stuff first, keep in the most risky stuff, so I'm still exposed to the markets in like a very high beta way. And yeah, as the cycle goes on, start selling that high risk stuff as well, if they all balloon up, of course, which I hope they will. So that's my strategy over the next while. Let me know if you think that's a good way to play it or what your opinions are. Join my free Telegram. Yeah, that's it. All right, thanks for watching. Cheers, bye.